I'm the executive director here at AgeWise, and today we have Rick Martin with us to talk about what's going on for 2025 tax preparation. Um, I have this short introduction and we will move forward. I do ask again if everyone will mute themselves if you're not already muted, and also turn your video off. It helps in the recording and for when we post it and others watch it on our website. We do provide what we believe is good educational materials here in our webinars. And likewise, the articles that are on our website and all of our participating providers, like Rick, who's going to be presenting to you today. We are a nonprofit, a 501c3. Any donations are most gratefully appreciated because it keeps the organization going. And we always love to have more volunteers because we are all volunteers. And the more help we have, the easier it is for all of us. Um, Excuse me, there we go. Our website, just in case anyone heard about this and is new, is here. Visit us early and often. We love to be here to help you. And people can also call us. Sometimes that's a forgotten item, and we can answer your phone calls. So this is a little bit about Rick. I don't read it to you because you can read, and you can read it also when we post it later. So with that, I am going to stop sharing and turn this over to Rick.
Appreciate it. Thank you, Barbara. So one thing to start off with is just keep in mind that whenever there's tax changes, there could be either permanent or temporary. So a lot of the things we talk about today are typically the temporary stuff. They only make it permanent once they know it starts to work out for the better good. Um, but yeah, I kind of just want to start off with I have filed quite a few returns already, and I'm starting to see a lot of people getting large refunds this year. And a lot of that is due to the tax changes that have happened through the one big beautiful plan we call the OBBBA plan. Um, a lot of it was for the better good, reducing taxes in many areas. And one of those things that they tried to push through is maybe kind of get rid of taxes on Social Security. Honestly, I don't see that happening anytime soon because that's kind of what they depend on. But what they did push through was a $6,000 deduction per person. So it could be 12,000 if you're filing a joint return. But that kind of has helped a lot of seniors save in taxes, especially if you're in a certain tax bracket and already having to pay taxes on Social Security in the past. A lot of folks who may not be filing a return or have no taxes that wouldn't be applicable anyways. But you do see the folks who mainly have just Social Security income and no income from any other sources. And when that happens, you don't typically have to pay any taxes on Social Security. But at any rate, I would always highly suggest that you file a return whether you think you need it or not, or don't pay taxes or not. Only because nowadays we're dealing with a lot of fraudsters out there who like to take advantage of people who may not be filing their tax return, and they'll file a return in your name anyways, and then they'll get a huge refund, and then you'll see a letter later in the mail from the IRS saying, "Hey, by the way, you made a mistake." Um, and again, Barbara is probably going to share a lot of areas in the Denver area that provide free tax services. I highly suggest that you use these places if your return is simple enough. And if you don't think you owe, just do it anyways, just to kind of protect yourself. From my perspective, I deal helping with people with returns. I do charge only because do a lot more than just file a return. I'm looking at what's happening, what's transpiring. I might get nosy and ask questions that may not be related. But that's only for me to understand your story more and see how I can help with taxes or maybe even other areas that you may not realize you need. And so that's why I appreciate coming to these webinars with AgeWise and learning more about other programs and how I can help further my clients in other areas that I may not benefit from, but certainly they can. Um, uh, I will say recently I had a client come in yesterday. They Her husband unfortunately passed away back in November, and he was told that he didn't need to file for many years. So they haven't filed since 2017. But I did take a look at what she had going on in 2025 and realized that they probably should be filing. One, they don't have to file because they don't owe, but two, she was having withholdings on a lot of their stuff. And had they just filed, they would have gotten a refund all those years. We're talking about 400 some years, 200 some other years. So thousands of dollars missed out on getting back what they already paid into. Unfortunately, they had they seen someone like myself, I could have been able to say, hey, stop withholding and not worry about it anymore. But again, it goes back to what I said in the beginning. I always suggest just filing a return anyways, avoid those fraudsters out there, make sure you're in line, and you shouldn't have any issues. Um, and other areas where people have received refunds this year is because of the change in overtime or in tips, has reduced taxes in those areas. So that's kind of important for a lot of people in those areas. Um, One thing probably for this group is if you did buy a car last year and got it on a loan, there is a reduction in interest. So keep that in mind if you bought a new car in 2025 and the next couple of years, few years, there might be some interest that you can be able to write off on the loan that you got for the car. If you guys have questions or comments, please let us know. But I'll continue here. If you heard about the Trump tax saving accounts, the Trump saving accounts are for anyone that was born last year or the next few years. They will match up to $1,000 into that account. So I highly suggest that you talk to your grandkids or your kids about it, and take advantage of that. And that is something that you can contribute to. There's a max of how much you can contribute to those accounts. But they're kind of like a retirement account and they grow over time. And then at a certain age in life, those kids should be able to take them out like a retirement account when they are retired. So it's kind of getting an early start. Um, and you see changes like that over time just from uh, back in the days. A lot of you might have had even pensions that you were receiving. You don't really see pensions anymore with companies. You kind of go work for a company, and it's up to you to really save in your 401k and your IRAs and Roth accounts and so forth. And just due to the fact that there's no more pensions, um, things have changed over time. Um, Another thing with the lady yesterday, unfortunately, her husband didn't change the beneficiary stuff on his pension. And after he had passed away, she was not a beneficiary. And so, unfortunately, she will not be getting anything moving forward from his pension that, they kind of relied on that income. But uh, at least she's in good hands now, and there's other ways we can be able to help her figure out how to get by on a budget and even find, you know, uh, money elsewhere that she can be able to live off of. Speaking of money, I don't know if you guys noticed recently in the news, but Colorado was saying that they have about $2.5 billion just sitting uh, in cash. Most of it is in cash. Is from claims that people haven't claimed. So a tip here, not tax related, but if you go to colorado.findmyunclaimedproperty.com, You might be able to look up your name and see areas where you've lived, and they'll have probably a few dollars, maybe even more, just sitting in unclaimed uh, stuff. So I've talked to my family about it and other people, and typically, some people might find a few $100s just sitting there, just from, bank accounts that you might have forgot to close, or, retirement accounts, or just interesting things that come up as unclaimed. But again, I would highly suggest going there and checking that out. Moving on. If you have a business, there's the QBI, qualified business income deduction, that has continued. And so there's been some changes there. And I don't know if any of you have side businesses, but that's something that you might want to continue using. Um, some of these free providers out there, they're not gonna probably uh, help you in those areas. They can. It just depends on the site that you're visiting. They also have income limits. And one thing is, you can't go back and you can't go to those sites and do previous years that you may have missed. They're only focused on the current year. And then if you have to amend a return, it's kind of hard to go back to those same sites. So keep that in mind if you're going to those sites. They're great for free services, but you might need to see someone like myself or other CPAs out there that can be able to go back to previous years or amend a return. But of course, they're going to have fees. Um, One change that I think might change a lot for a lot of people is, if you've been taking the standard deduction the past few years, the standard deduction has been much higher than if you were to itemize. A lot of us have been itemizing for years. And then back in 2017, when Trump first came out with the Tax Act change, um, that made it so that the standard deduction was going to probably be higher. So I would say most people have been taking the standard deduction, but this year might be a little bit different, only because if you have been taking the standard deduction, you might be able to itemize due to the SALT tax change, where you were capped up to $10,000 from state taxes that you were paying. That's, state income tax, sales tax, personal property tax, and then also your real estate tax on the home. A lot of that, for a lot of people, was capped at 10,000, but now moving forward, it is up to 40,000 based on your income. So something to kind of look into. You might be able to itemize and get a little bit more of a refund than just taking the standard deduction this year. And then a slight change also is, you weren't able to uh, deduct your charitable cash donations because you weren't itemizing anymore. But in the past, at least for my clients, I've been able to make sure that they've been able to take that charitable deduction with the state of Colorado. So that's great. But with the OBBBA change, they are now allowing up to $1,000 in deduction without having to itemize on your federal return. So that's actually even bigger of a tax return than if you were to just put it on the Colorado return. So a lot of playing there to do, and a lot of thinking to do of how you want to approach that. But a CPA like myself can be able to help you figure out where the best place to put that is. Um, and then, there's been also an increase in child tax credits. So if you have dependents that are under the age of 17, you're going to see a higher deduction in that area. There's a lot of changes. Sorry, there's no slides. I know it's kind of boring, but it's taxes too. Um, there have been some drawbacks, um, but the drawbacks are for the future changes. So you're not going to see a lot of these credits from fossil fuel changes with, all electric cars anymore, or getting a new furnace. Um, but there have also been some changes in if you're working in your age 60 and 63, you can actually um, pay a little bit more in a catch-up contribution. So a lot of people um, age I think it's 55 and higher. No, I'm sorry, 50 and higher, you have a catch-up contribution that you can do to your 401k if you're still working. But at age 60, 63 right now, you can actually like do way more than just the catch-up contribution. So something to consider if you're still working. Um, but again, one of the drawbacks is if your income is too high, you may be limited to putting into a Roth contribution, um, and only just doing IRA contributions. Um, Barbara, do you want to? I'll take a break here. Do you want to share some of those sites that are free in the Denver area?
Absolutely. Give me just a minute. I want to share my screen. We usually had Benefits in Action. They're a great organization and they used to do tax preparation for free. And because of having to cut back on things, they're not doing it. And everyone else is really busy. So you all get me. I'm taking you to our website for the moment. We've been working on that and updating it and changing it. This is our homepage. If you click on this search button over here and go to service type, you will get the site map so you can see all the different categories that we have information. And if you go to tax services and advice, of course, we will see Rick Martin here. Um, Denver Asset Building Coalition works in a lot for free with preparing taxes for free. And I'm bringing them up and I see I need to make a change because I had updated this. So if you're married and filing together, it's a $70,000 limit. Single filers are $55,000. That means if you make 55 or less, they'll do it for free. And it is my understanding that most of them will only do your regular 1040, not include a business. They have a number of stipulations. And that's why I'm showing you their page on the website. There's some additional information here, but you can always call them and find a site if it's not listed. I got this from their website, but I'm sure they know others that are probably more north or south of the specific Denver metro area. They do great jobs. I've known some of the people who have and they're all volunteers. They volunteer to do this. They have, as you can see, specific days and times. It is first come, first serve. But the people that'll be working with you have been well trained. They're very knowledgeable. These are essentially, um, I don't know if there is such a thing as a real simple tax filing, Rick. You can correct me on that. But they're relatively simple, you know. And that's about all I can tell you about that because I'm no expert. We're just trying to connect you to the best place to go. And again, if you're not using a CPA like Rick or one of our other providers, I highly recommend you contact these people and they will put you in touch with where you need to go. And with that, I will stop sharing
Yeah,
and turn it back to you, Rick.
yeah, thanks, Barbara. Again, these sites are great. They're usually typically people who have been tax preparers and maybe they're just retired and trying to help out. Um, they do have their own stipulations. So if one doesn't really work out, maybe try to reach out to another one because they might be more a little bit more flexible. But besides what Barbara showed you, there's other places too to get it done, or you could just go to irs.gov and do it yourself online. If you do it online with like irs.gov, you're just doing the federal, not the state. So again, maybe look at going to the state site and doing your return there. Um, but if it's that simple, I will always suggest doing it, and make sure you do it. But I would say a lot of my clients, like their income is not even that high. They're not even close to those thresholds for income limits. They may not even have much in income, but some of them still use someone like myself to be able to get the help that they need because there's other areas that I can help them in as well. And so a lot of, you know, I would say it's typically those who are more and more poor, they're going to need more and more help. And so I'm willing to be able to help anyone. It doesn't matter your range. Again, it might just come with this fee. My fees are typically a lot different from other CPAs. I don't charge as much, and it just depends on your circumstance of what's going on. But I just try my best to help. And if I can't help, or I can at least send you in the right direction. But those sites do change because a lot of them are dependent on some funding from the government in some cases. And so if they can't get the funding, they might not be open for the year or years to come. And they just kind of change often. So it's kind of makes it hard, but they are available and they're out there. Um, it, I guess I wanted to bring up just a few things, like maybe some stuff that I have seen in the past year. Um, Again, right now, there's a lot of good things because people are getting higher refunds or tax credit back because of the changes. But you also want to be careful, like with IRS notices that are coming through. I had a client come to me and say, "Hey, I got this IRS letter and it says that I owe 13,000." I'm like, "Oh dear, like what did you miss? Like what's going on here?" And so we took a look at it, and she was just willing to just pay it and be done with the IRS. And yeah, typically that's the case. But it's always good to have a second eyes on it with like a CPA expert and be able to say, "Hey, wait a minute." In her case, it was, "Hey, wait a minute, there's something that we can actually do." And so we were able to reduce her taxes to like $500 instead of having to pay 13,000 on it. So just be careful with those kind of things because the IRS doesn't have all the information in front of them, so that they do those kind of things to say, "Hey, this is what we noticed. What do you think?" And so you have an opportunity to be able to at least state your case of what's going on. Um, and then just other areas like one of my clients that has no income whatsoever. She was told by her sister to go get a trust. And, you know, she came to me and said, "Yeah, I just got this trust done." And I was like, "Well, why did you do a trust? Was there any reason to do the trust?" I'm like, what did you even pay for that? Because usually those are expensive. And she's like, "Well, about $5,000." And I was like, "Okay, but what was the main reason of doing a trust?" And there was no reason. She didn't need to do a trust. So those are the kind of things that I watch for and look for to make sure like you're not being taken advantage of. Unfortunately, in her case, there's nothing we can do. But another thing to talk to your kids about is like, hey, if they inherited a account from you, if you do pass, they have up to 10 years to take it out. So like, let's be tax advantaged. Let's put some strategy to it and take that out over time if we need to. Because I have noticed some people that, their parents passed away and they're like, "Yeah, I got this account and I just cashed it out." And I was like, "Well, maybe you should have waited a little bit or taken it out over time to save a lot more in taxes." Um, so those are things to watch out for. And then even on the flip side of if you're contributing to an account, how much you should contribute. If you're over contributing, I might let you know that you're over contributing and maybe you do something different. Um, so things like those things are important to think about short term and long term as far as what you're paying in taxes now and in the future. Um,
I
I
have a
think just,
question
yeah,
that
go ahead.
before you go on further, with the current increase in deductions and the older, that $6,000, that we can deduct. If someone has a business and they're an older adult, can they just do the standard deduction but still attach a Schedule C, or do you have to itemize when you have a business for everything that's involved in your financial life?
Yeah, I'm not sure if I understand the question, but it sounds like if you have a business, you'll file a Schedule C and show the income, and then you might have some expenses to write off with that. But that's just apart from taking your standard deduction or taking the
Okay.
$6,000 deduction from Social Security. With the individual I mentioned earlier, whose husband passed away in November, they didn't have to file because they don't owe taxes. But um, with their Social Security of X amount, it brought it down to only 5,000 was taxable. The IRS is still allowing you to take that full $12,000 deduction because you had more than just 5,000 in Social Security. They in their case they had more than 12,000 in Social Security, but they were still able to take that full $12,000 deduction and use it against the other income that they had coming in as well. So really everything just came down like they don't owe. Yeah, they don't need to file, but again, they were having some withholding over the years. And so that I was like, yeah, you probably should be filing to get that money back. So again, I always highly just recommend file. If you don't think you need to, still do it. Just because of the fraud stuff that's out there.
Okay, thank you. And if anyone else has questions, just put them in the chat and we'll relate them.
Yeah, I think statistically speaking, about 50% of tax filers use a tax preparer. So whether that's free services or not, they're using someone to get their tax return done. The other 50% are either doing it themselves or not doing anything at all. So I would say never be afraid to use someone. If you're getting the expertise that you need, you're going to get more out of it. You know, nothing nothing comes for free in my case, but you're going to get a lot more value out of it.
Does anyone have any questions? I wanted to make sure I was on audio. Where do you show a 1099-G form?
Okay. 1099 G form, it, depending on the software you're using, there should be a place to put that. Um, I think if you're using a free service too, like with irs.gov, you just kind of let them know you have 1099-G, and then it'll give you a screen to fill out your unemployment compensation or whatever it might be. Um, but that usually just comes up as a line item on the return. So at the end, you should be able to see that on your return to make sure you did it right. Because that those are taxable amounts.
I'm not seeing, what is a 1099-G form for?
Typically a 1099-G form, you're going to see like unemployment compensation
Um,
from like the state of Colorado. If you're unemployed, you might send in a claim to say, hey, I haven't been working for quite some time. I need some kind of income just to get by until I find a new job.
Now that I've interrupted you, Rick, I don't see any other questions.
Yeah, no worries. There's probably a lot of questions out there, but feel free to reach out to me. Maybe I'll just put in my contact information. Yeah, you guys know how to find me, but I'll put it in the chat.
And we're going to wind up ending early, which will give everyone almost a free half hour, an extra half hour in your day that you weren't counting on there. Is there a place to report gambling winnings?
Oh, good question. Yeah. So that's kind of like the 1099-G where you'll report that income. Um, and um, again, if you're gambling, you most likely have had some sort of losses. And if you're itemizing, you can write off the loss, but that has kind of changed over time too. But the 1099 that you're getting is what we call like a W-2G. And so you want to report that income. And then you can write off the losses up to that income amount. You can't do more losses more than that income amount that you got. So just keep that in mind as well. If you're itemizing, you can be able to do that.
Well, congratulations to the winner. They would have to file that. Does anyone else have any questions? We've got the time.